I can understand, why people are reluctant to do it, because in your own community, it takes a certain amount of courage, to walk out onto the main street or the main road with just a placard or whatever it is.
Yeah, why here? Why not somewhere else?
Yeah, and well, it has to start somewhere. Something has to. It doesn't matter what it is. It starts somewhere. So, and like it just started here, and we built up, fairly quickly to 70, 80, 90 people from the locality. Now, there isn't even a village in Ballyhea, but we did a run to the Dáil, where we went from here, stopping at every town on the way up, and did a little protest every town on the way up. But we learned up there about another group who had come up from Kilkenny, protesting the same thing, a few months previously, and we'd heard nothing about those people. So, it's possible that that there were other groups protesting around the place, but they just get no publicity.
There's small protests scattered, but you haven't seen really the mass protests like you've seen in Athens or Madrid, even very violent unrest. That never really happened in Ireland, did it?
Not the violent unrest, no, but you did have the mass protest. I mean, the problem that we have here, and the problem that the people like ourselves, groups like ourselves, who are protesting just against the bank debt and nothing else, is that it's been done very insidiously here. That what happened in Ireland was that our banks got into trouble, and the debt that they had accumulated has been foisted on the people, and that's what we are protesting. It's 69.7 billion euro of debt that was foisted on us, but the way it was done is very insidious. I mean, in Cyprus lately, you had the situation where overnight you had a mass protest building up outside the Parliament there, because they were proposing that they were going to take money from the bank deposits of every depositor in the Cypriot banks. Every depositor, no matter how much you had in there, you were going to lose a certain percentage. They were dipping directly into people's pockets to take the money out. And that didn't happen here. As I said, there was nothing ever that said, you don't get a wage slip that says deduction for bank bailout, or you don't get it on your bank statement, this is deduction for the bank bailout. It was done insidiously here. We had 20.7 billion euro taken from our pension reserve fund, and that was taken, from funds that we had accumulated. We never saw that money leaving, but it was taken. And if that money were there now, what we could do with that money now. And the second major way that it was done was through promissory notes, 31 billion euro in promissory notes for two zombie banks, failed banks. And that money has been kicked into the future. The interest on that is going to be paid over the next 40 years, and then you're going to have what they call bubble payments back in 30 to 40 years on that. So again, that is not the effect of that has not been felt directly now in anybody's pockets. But the fact that the bank debt itself has never been a focus is, I think, down as much to our media and the way they've covered the thing as anything else. People just haven't joined up all the dots yet. But for people who say there has been no protest in Ireland, there's been massive protest.
There's a lot of anger.
Unbelievable anger. Yeah. I mean, bubbling below the surface. All you've got to do, I think, is to go into any house in Ireland, and I'd say especially in rural Ireland. I'm living in rural Ireland here, and it's what people are talking about. The austerity measures and all this stuff that's happening here. I mean, there's massive anger, especially, and one of the major things that we look at here, is that those at the top, those who caused all this, our bankers and even the bus banks, people were still getting massive remuneration even in the bus banks. Massive remuneration, massive pensions. You had the situation here where we put, I think it was nearly 35 billion euro was put into Anglo-Irish Bank. I think it's nearly 20 billion that went into Allied Irish banks. They did a survey last year, I think, here on, the defined benefit pension funds in Ireland just crashed. They crashed all over the place, but they crashed here, and there were only, I think it was two defined benefit pension funds that were actually fully funded. One was Anglo-Irish Bank and the other was Allied Irish Bank. They took some of this money, the bailout money, and they topped up their pension funds with this. I mean, this is the kind of stuff that has gone on here. Unpunished, no investigation yet, no bank inquiry yet, nobody punished from the top in the banks, nobody. And then you look at our politicians and our government here. We are one of the highest paid in the world, in this country here, for the size of it even. And like we're looking at all these people who are imposing the austerity on us and telling us that we have to tighten our belts and we're all in this together. And like we have a prime minister who is getting more than almost any prime minister in Europe. We have more ministers than almost any other government, and we have in not just the more ministries, but we have junior ministries. And these people are all on massive salaries, 150, 160,000 euro a year, plus benefits, plus massive pensions on top of that as well. They only have to, I think, serve 2 years and they get this pension, ministerial pension. And we've all these guys, the people who led us into this from the previous government, the Taoiseach, the prime ministers, they are now out retired. Some of them are, in their 50s. And they're on these massive pensions. And like we're looking at all this, the people down on the ground who are being squeezed more and more. And people talk about, in Ireland that it's, the underprivileged and the most vulnerable who are being hit and all this kind of thing. And they are. They're being disproportionately hit. But Middle Ireland is being squeezed tighter and tighter and tighter. And there is, like I'm telling you, this country is ready to explode.
But isn't it too easy to say, we're being squeezed, the banks screwed it up, we are paying their bills? Isn't there responsibility for all the Irish people as well? Like part of the bank problems was related to the housing bubble. A lot of Irish people bought a second house, a third house. A lot of people went into the craze of building up big property folios.
Yeah, so some people did, and and their numbers and how many of them are there are emerging now with this property tax that they brought in, the number of people who have registered multiple properties. But the bulk of the Irish people here, the bulk of people who are in trouble here were first-time buyers, and like during this property boom here, like people in Ireland, are not as, I think anyway, they're not as financially savvy as people in a lot of other countries in the world. I mean, there's a tradition here now of owning your own home. You must own your own home, So you had people here being told left, right, and centre. They were being bombarded from all the newspapers, from all the media, from all the economic experts. That this was sustained and it was going to continue. And if you didn't get on the property ladder now, you were not going to be able to get on it next year. You had to buy now.
But it was a craze.
It was. And people were forced, and a lot of people, and I know a lot of them were first-time buyers, were being forced into the market sooner than they wanted to and paying an awful lot more than they ever dreamt that they'd have to. But they felt that they had to, that this was the only way that they were going to get it. If they didn't get in there now, and then you had on the other side the people who were buying second homes, a lot of middle income. And I have to say around here, I don't know too many of them. But they were there, there's no doubt about that. But they were being told, look, safest houses. That's the expression, You want to look after your pension, you want to look after your retirement. This is how you do it. Buy a second house, invest in property. They were following the advice of all the experts that this is what you do with your money. This is how you get your money. But nobody here is going back to the source of the problem. Where did all the money come from? All the money that the Irish banks were lending out so recklessly, and they were lending recklessly. I mean, I know of people who were going into banks here and they were asking for 200,000 to buy a house down the road, and they were being told, look, here's 250. Furnish it. Buy yourself a car. Have a holiday. Yeah.
But didn't people not, you say there was a lot of pressure, but like when you get a 110, 120% mortgage, can't you say that never made economic sense?
No, I didn't. But I'm saying, like, you rely on the people who are giving you all this advice. You're relying on them. They were the experts, and nobody was shouting stop, or very few were shouting stop. But I say, but I've spent 25 years in engineering, in construction, and like you come across problems there, on no matter what job you're on a daily basis. You only solve a problem by going back to the foundation, to the base of the problem. The base of this problem was all the money that flooded into Ireland. And it flooded into Ireland from what they're called the core countries, from Germany, from the Netherlands, from France, from the UK. This money flooded in here. Just as it flooded into Greece, it flooded into Italy, it flooded into Spain. Because with the creation of the euro, you had countries like our own, who had our own currency, who whenever we went to the money markets to borrow, as a country or from our banks, had to pay a premium. Because we were a small currency and we were vulnerable. But now we're suddenly part of this new monster, this new huge currency, a monster currency I call it, because there was no control on it. And suddenly our banks found that they could go to them exactly and borrow this cheap money. But there's an onus on bankers, and this is a fundamental of banking, that if you're handing out money, you treat it as though it's your own. You have to know where that money is going, that it's going to be paid back, that the person you're giving it to is in a position to pay it back. That did not happen with the Irish banks, because when those people were from Deutsche Bank and from all the other banks across Europe were lending those hundreds of millions into the Irish economy, where was their background work on where that money was going? Where was their due diligence? It didn't happen. Where is their responsibility in all this? I mean, surely if you're lending out all that money, you want to know it's going to be paid back. They were the ones creating this bubble in Ireland. Their hundreds of billions created the bubble. The bubble would not have happened. You can want to borrow all the money in the world. I don't care who you are, what your background is, or what finances you have. You can want to borrow all the money in the world. But if the person who is in a position to lend it doesn't want to give it to you, you're not going. There's nothing you can do. There is nothing you can do, whether you're responsible or irresponsible as a borrower. If you can't get your hands on the money, there's nothing you can do. It's the primary responsibility rests with the lender. And that did not happen here. There was no due diligence done by the core banks from Europe here, because in the beginning, when the bubble was building, they were making massive profits. They were blinded by the greed. They never then did their due diligence afterwards. And that is the core of this problem. That's the source of the problem here in Ireland. That's where it all started, was with the creation of the euro, and nobody controlling what was happening with the euro. And like the ECB's, their only brief was to make sure that there was no inflation. So they didn't give a damn. There was no inflation. In fact, they actually contributed to the problem here, because they kept on lowering the interest rates, because it suited Germany, it suited the big countries. It didn't suit what was happening in Ireland, but they didn't give a damn about Ireland. And now they've washed their hands. From the beginning, they've washed their hands of any responsibility for this. And to my mind, it was the ECB, it was those who created this currency that are most answerable for what happened subsequently. Because even in Greece, what was happening there, and the borrowings that were happening in Greece, in Spain was a bank problem. Greece, the government was borrowing. But nobody was doing due diligence there. They were saying, well, this is government borrowing, it's sovereign debt, so there's no problem.
What should Ireland have done?
Ireland in 2008, and again, as I said, that is, to my mind, that is the source of it. The creation of the euro was the source of it, and all the money that came in. Yes.
So you can do nothing about it. It's there. But when you hit the point in 2010.
Well, we didn't. We hit the first problem we hit was 2008, because when the international banking crisis started in America and everything else, and then the tsunami hit Europe, and Ireland was the first country. I mean, we are out in the Atlantic. We were the first country. So 2008, the blanket bank guarantee here that night was the first effort in Europe to deal with the banking crisis, because it hit us first.
Was that a mistake?
Oh, huge mistake. But it wasn't. It's hard to blame the guys at the time. Yes, they were brought in on a Sunday night into a house in Merrion Square above in Dublin, the Minister for Finance and the Taoiseach. And they were this would have been a meeting that was planned for weeks by the banks. They knew what was happening on their side of things. On the other side, there was an idea that there was trouble brewing in the banks, but they wouldn't have had any idea about the size and scale of the trouble. But they went in that night, and they were assured by the bankers that night that it was a liquidity problem. That's all it was. Lads, give us this whole guarantee for a few months. We'll get over this, and that'll be the end of it. And they were told it was about 5 billion was the total exposure. We know now that the total exposure was about 400 billion. But this was, the Minister of Finance came out afterwards and said it's going to be the cheapest bailout in history, 5 to 10 billion. And also he believed it would never even be called in, that there was absolute, and these were all the assurances he was given by those people. Now, either the bankers that night giving those assurances were complete idiots who didn't know what was going on, or they did know what was going on, and there was something far more sinister that happened in that place that night. But that was the first mistake. It was a 2-year guarantee that they gave, blanket bank guarantee, guaranteeing everything. But as soon as the real problem started to emerge, what they should have done was call them back in again and say, hold on, we're stopping this. And they could have, I think, on legal grounds, they could have just said no. Like, this was given under false pretenses. We're now pulling the blanket bank guarantee. We're just going to deposit our guarantee deposits up to a certain amount. That's it. But even at the end of the 2 years, Like there was damage done in the 2 years. There was a lot of money that, that was covered, that fled and could not now be, hands could not be got on it. But at that stage, Brian Lenihan, the Minister for Finance, knew that this, everybody, the world knew that this was a problem of far bigger scale than he had been led to believe. And he was now ready to play hardball. But the ECB now came on the scene. And the ECB, like in no uncertain terms, left that government of that time know that no bank, not just was no bank going to be allowed to fail, no bondholder of any description, senior, junior, guaranteed, unguaranteed, nobody, no bondholder was going to be left behind. And I think that was that was when Ireland really started to feel the pain and was crushed after that, because once the ECB leaned on us, and the EU also was using, and I think abusing, its political muscle, because we had joined what we thought was a community here, the European community, and I voted for it. I think a lot of people voted for it. Obviously they did, because we're in it. But even in Lisbon, when Lisbon came on and they were going to have more powers in Europe, we were assured that with the weighted voting that was going on and the proportion, that just because we were a small country didn't mean that we were going to be dictated to and we weren't going to be bullied into anything. And,
you voted against.
So, we voted against, and then we were told we had to vote again because we didn't get the answer the first time. But we found, forget about all this. Like what actually happened politically was you had Germany and France just dictating matters. You had the duopoly of what came to be known as Merkozy, Angela Merkel and Sarkozy, dictating everything to the rest of Europe politically. So we were bullied politically by the EU, and then we were actually blackmailed by the ECB into assuming this debt. And things have gone downhill here ever since. People talk about a bailout, and there was a bailout in November 2010 here, or 2011, but it was a bailout. November 2010, but it was a bailout of the banks and the bondholders. You had the Troika coming in, the IMF, would have burned the bondholders, wanted to burn the bondholders. We know that now, but the ECB especially came in with just one agenda, and that was to bail out their banks and their bondholders, and that was the only agenda they had. And they came in, and Ireland was just crushed, and has been slowly. We were crushed then, but we're actually being squeezed year after year after year since then.
What do you think then when the government says, and Kenny says, well, in 2015 we're out of the woods, we're back on track?
Well, it's nonsense. What they're saying, and Enda Kenny has said this many, many times, that at the end of 2013 we'll be out of the bailout programme, like the bailout for the bank programme. And he said that he's looking forward to waving goodbye, to the Troika at Dublin Airport. And I've said many times, well, that's fine. He can say goodbye to the Troika at the end of this year. But the Troika will be leaving with a smile on his face, because the Troika will have achieved everything that it came here to achieve. Everything that came to inflict on the Irish people, it has done. It got its way completely down along the line. This government hasn't fought them at any stage of the process.
So what's your protest achieving then? It seems like almost hopeless.
Well, as I've said to people many times, we're not working on hope. Because if you are working on hope, hope fluctuates, hope is, you're hoping something will happen. We're working from pure determination. We've decided that this is 69.7 billion euro that was imposed on us. We will expose the ECB for what it did to us, for the blackmail that it did here in this country, because our own government is lying to the world. Europe doesn't know what's happening in Ireland. Europe has no idea what is happening in Ireland. We were in Frankfurt, we were in Belgium, and we're meeting people there who are talking to us about the Irish success story. They're not living here. You want to live here to know what's happened here and what is happening here.
You're trying to expose it, but do you offer an alternative as well?
Well, there's no question of alternative. It's just to end what has happened. That's all it is.
But what could be the consequence? You could be out of the euro, maybe.
If that's the consequence, then that's the consequence.
Would that be bad for Ireland?
I don't know if it would be good for Ireland at the moment, but I think if you want an indicator, look at Iceland. If you really want an indicator, look at Iceland, because they were in a similar position to us. They're a smaller economy than we are, They're a far more vulnerable economy than we are because they are so dependent on just fishing, nothing else. I mean, you look at this country, you look at what we have in this country, you look at all the natural resources we have in this country, and like we would work our way out of anything. But if we had done what Iceland did, I think that we would already be growing our way out of this thing. If we do it now, even though we're already gone 4 years into the situation, and even though it's a lot more difficult to work to try and get money back than it is not to give it in the first place. Like I think we would still do in Iceland on it. I think we would still grow our way out of this very, very quickly because we're a very resilient people.
Could you sum up from what's happened the last few years? Like we're talking about very abstract, big numbers, banks bailed out, but how is it affecting the lives of ordinary people? How do they notice in their daily lives?
Well, I notice it in the daily lives here because from my own perspective, I mean, like we're in a good position here.
Because you work.
I have a decent job. I get expenses. My wife is a principal in a school. She gets very well paid. So like we're fine. I've two kids, both are in college, and we're managing that no problem. But I've noticed among my friends and among the people around here, like it's just getting tighter and tighter and tighter.
Because of what?
Because of all these things that are being forced on us. I mean,
you name those things. A few examples.
Like when the number of new cars on the road, in Ireland you can tell a new car because the registration process here, like it's the first two digits would be the last 2 years of that year. So the last two digits in that year. So 11C would be a 2011 car, 12C would be 2012 car. 131 is 13, but you're seeing fewer and fewer new cars on the road. You saw it last year, you saw it this year. The motoring industry is suffering hugely because of it. You go down to, like, everybody knows that the Irish bar, the Irish bars separate us from everyone else in the world, but it's like pubs are closing all over the place. Pubs are being squeezed. Businesses are shutting down, although small businesses are shutting down all over the place. You go through any main street in Ireland now and you're seeing places boarded up. Like just drive through the place. Immigration is the biggest one of all. I mean, like I know it from my own perspective because there were 10 in my family growing up, and in the 80s, we had another recession here in the 80s, 8 of us left, went to America, and I'm the only one of the 8 that are back. And people say like that, these people will come back, they'll come back. They don't come back. You go to a new place, you settle in, you get married, your kids are brought up there, they have their friends there, and then that's it. You get sucked in there, And like, I'm the only one that's back in Ireland from that 8 who left. And like, if you look around, even where we're talking here now, look down the house down here, there's one son there, he's gone, he's in Australia. Son across the road in the house there, he's in Australia. They had a gathering over Christmas, about 10 from this locality in one small area in Australia. Like 87,000, the last figure that we got, 87,000 in the 12-month period. You didn't have that since the 1840s, 1850s, the Great Hunger here. Numbers that we thought we'd never again see. But without that safety valve and without that pressure relief valve here, like I shudder to think what this country would be like because
it's almost a blessing in disguise.
It is. I mean, it's a curse. I mean, to watch families, disintegrating, and they are. I mean, I've seen it here. Like you're seeing parents, and they're glad in one sense, that their sons or daughters can go to somewhere where they'll get work, because watching them here without work and watching the despair growing. I mean, suicide is a massive, massive problem in Ireland now. Massive problem. I mean, the number of people taking their own lives of all ages and genders, but men especially, it's just, I'm telling you, we said this over to Sharon Bowles when we went over to Brussels last week. Like, when people are doing all their calculations, and when all these money men are doing their calculations in the ECB and looking at Ireland and looking at what we can afford and can't afford, like, the numbers tell you one thing, but not factored in there is human misery. I mean,
they're not personal stories.
No, you put a price on the human misery. You can't. Like, when they're doing that, when they're factoring what can Ireland afford, like how much in the debit sheet is human misery worth? Is that a factor? No, it's not. Independence, freedom and independence. I mean, we had people here nearly 100 years ago who went into the GPO above in Dublin and they sacrificed everything. They sacrificed their lives. You know, you talk about risk. You know, what would happen if we get out of the euro? What would happen? I mean, how much is freedom and independence worth? I mean, put a value on it. How much is it worth? To me, like, freedom and independence is worth anything. It's worth almost anything. You know, and there's a slogan that we're using, you know, it's better to die on your feet than live on your knees. And this is what we are doing here. We're living on our knees here. We have caved in to the ECB and the EU over and over and over again. And there comes a time, you know, when you just have to stand and fight, regardless of the consequences, that you just have to stand and fight. And that's what we're doing here. Where it leads us, I don't know. But if it leads us out of the mess we're in, and if it leads us out of slavery, which is what we're in now, we're facing 40 years of paying back debt that we never, ever had, loans we never took out.